Hello, everybody. Hello, everybody. Welcome to our Friday live stream. This has been something we've been doing in GoToWebinar for quite a while, and we're making a change to do this in YouTube. I'm actually looking forward to this because I think this will give us a great way to do this a little bit more efficiently, improve some interactions, and excuse me, continue to have this session in a really nice format. Please, if you can, go ahead and type in the chat. I'm going ahead and putting a message in here now. If you can go ahead and respond here, just let me know if you can hear me and see my screen. I would appreciate it. You should have the ability to type into the chat. I did enable that before this started, but let me just double check. Yes, you should all have the ability. Okay, Barry, thank you. All is good. Just making sure I had my settings set correctly. That was a mistake I made last week, and I apologize for the confusion. Also, understanding that this is still a little bit of a transitional process for all of us, considering where we've come from, and those who may be new to Rebel Income. I want to just go over a couple of basics. We have moved all of our content to Discord, and that's something that I'm really excited about because I think it's going to make being able to get access to our training content for you is going to be a lot easier. And it also simplifies some things on our end from an administrative standpoint that I think is going to make it easier for us to share information very, very efficiently. The first thing, of course, to talk about are my weekly trade alerts. And if you're in this live stream right now, then obviously you're on the server, which is wonderful. You can always see you'll always be able to see the trade alerts that I post each Tuesday in the trade alerts channel. So all of the content on my Rebel Income Discord server can be found on the left-hand side. I've created different channels for the different types of content that I share with everybody. So the trade alerts are right here under the trade alerts channel. And the format is different than what I've done in the past. I'm giving you all three of the trade setups for the stock that I'm going to work with each week, right up front in the post. And then if you want to read more details about the analysis that went into that company and that stock, you want to get the full rundown, then you can go ahead and click on the PDF here that will download it to your computer, and then you can open it up with Acrobat or any PDF reader that you have. So you can always get to that any time that you want. The live webinar, this is going to be a link that will change each week. That's just the nature of the YouTube live stream, is that I need to generate a new session each week rather than setting up a recurring one. And so I will post this here in the live webinar channel each week to make sure that you have access to it, and just try to encourage some interaction between all of us. I'm going to be asking you to give me a reaction to the post just so I can have an idea of how many people are going to be coming in. Hopefully we'll get a few more coming in as we get things rolling. If you have questions, whether it's for me or even if you just want to share some thoughts with the Gib Test of YouTube chat, I see you. Thank you very much, sir. I really appreciate that. That's awesome. By the way, if you have a question, comment in the course of this session, please do put that in the chat. I am going to be monitoring that throughout the course of the session today to make sure that that I answer any questions that you have that come up. All right. If you want to interact with me or even with the rest of the Rebel Income community group, whatever you want to call it, you can do that in the open discussion channel. This is something that we've not made available in the past. We did have a Facebook group for our investing group for a little while. Didn't really do too much with it though. But I want to try to enable the opportunity for you to interact with me and with each other as much as possible. And so this is where open discussion can be used. If you send me a message here, I will certainly, I'll see this a lot sooner than I will an email. And so I should be able to respond to it sooner than an email. In the same vein, my email address has changed, the one that I've given you in the past. We're deactivating. And so for the sake of simplicity, and full disclosure, my new email address I just put in the chat, rebelincomesystem@gmail.com. Feel free to email me there in place of the thomas@investive.co that I have been using. Okay, a couple of other things. The recording of today's webinar is something that I am going to be posting in the recordings channel. You'll see that here. Now, just in interest of full disclosure, I am going to be sharing this on the YouTube channel, but not until the end of the weekend, and that gives everybody in the group an opportunity to go through this session. If you weren't here live, you can you'll still be able to review that content here in the recordings channel. That's going to continue to be available for you on demand. The early access channel, this is another one that's kind of new for you, and that's every time I post a new video, like a stock analysis or something along those lines on YouTube, I'm going to put them here first. I'm going to give everybody in this group an opportunity to review that content before I publish it out to the rest of the YouTube world. So I hope you find that useful. Another area here that is also new is reports. 3 times a week, Monday, Wednesday, Friday, I will post analysis of stocks that I've been watching and that I think might be of interest. Doesn't mean that these are always going to translate to potential trades, but sometimes they do. But this is going to give you an opportunity to hopefully feed your watch list a little bit outside of the stocks that you see me highlight in the specific trades I make from week to week. You'll get to see some of what crosses my desk throughout the course of the week. The articles channel is where I publish where I make available the Thursday posts that dive a little bit more into the Rebel Income system and excuse me, and some of the different individual pieces of that system and why I've set it up the way that I have. Same kind of thing with the trading alerts. If you want to read the full post, just download the PDF. Okay. Any questions about that at all? If not, we can always move on. Again, feel free to put any comment or question that you have in the chat, and I'll see it. So, all right. It is Friday as always. That means that there's opportunities to look at some of the open positions that we have. A lot of the income generating trades that I place use weekly options. So just about every week there's something coming up due for expiration or within a week or two of expiration. As the market does what it does and is ebbs and flows, then there are opportunities to evaluate those positions and see what can be done to adjust if necessary. So let's go ahead and dive straight in. Let me switch over here to my track record, and we can see there's only one trade on deck for expiration today. So we'll start here with BAC, Bank of America. This is a put sale that I placed on the 21st of August, selling the $38 strike price. Hold on just a moment. I don't think you can see that. So let me change my, sorry, Windows. I need the entire screen. There we go. Okay, apologies. So here we are, Bank of America. Put sale that I placed on the 21st, selling the $38 strike price. Expiry today, I brought in 72 cents per share on the put sale for a little under 2% for about 3 weeks. That's a typical healthy income generating trade. Let's see where Bank of America is. The market's been a little bit volatile over the last few weeks. This week's been a little bit better. Markets tried to rally and show some strength. And so here we are now. The stock is down a little bit today. Change the color on my drawing tool here. It's been tracing back after hitting a high, probably about a week and a half ago at about 41. And now it's just a little bit above the $38 strike price that I sold. So it's at 38.60. That does mean that it could finish below $38, which would trigger an assignment if I'm still holding the contract through the end of business today. Now, of course, this is my normal mode of operation here is to let the option expire, and if I am assigned, I take the assignment and look for an opportunity to generate some additional income, either just from receiving dividends or from possibly selling covered calls. So being assigned here at 38 is not something that I'm very afraid of. In fact, with the stock's next expected support, should be right around the 200-day moving average here, my blue line, which right now is just a little bit below 37. I'm just going to go ahead and call it 37. Even if I am assigned at 38, it looks like it should be able to stabilize pretty well. This is a stock that has been following a really nice upward trend for just about the entire year, as we can see the 200-day moving average. Sorry for the really ugly drawing here, but we can see the 200-day moving average trending very nicely upward, and that's given the stock a point of reference to act as support. It certainly did here, but even as it crossed down below the 20-day moving average, which is my green line, we saw some dips here. It didn't quite get to about halfway between where the 20-day and the 200-day moving average sat. Here's a little dip here as well. And so these are all instances, despite the distance, where the 200-day moving average is an indication of bullish support. So probably not too much downside in the near term on the stock right now, even if I am assigned at 38. Has come back a couple of pennies just in the time we've been talking. But if you are of the mind of trying to make sure to minimize the chances of being assigned, thinking about what you can do to manage the trade now probably makes some sense. So let's take a look here at where things stand. I'm going to go over to options. The $38 strike price is right here. And remember, I brought in 72 cents on this. And so the asking price on this now is 2 cents. So if I was of a mind of trying to minimize the chances of being assigned, I could certainly buy this back. The last trade on this was 1 penny. Let's see what the volume has been like on this. Go to contract details. A lot of open interest and a lot of volume here. So I could probably just go ahead and I could follow the method of some of our rollers in our group, like Joe and some of our other friends, and just wait for the market to come. We put it in for a penny and hang on to 71 cents rather than 70 cents if I wanted. But even if I didn't want to monkey with that, I just went ahead and took the current ask at 2 cents. I'd still hang on to 70 cents. I know you may be saying, why aren't you doing this right now? Why aren't you placing this trade right now? And there are some advantages to doing it, right? If I buy this back now, I eliminate the potential for an assignment if the stock suddenly picks up even more bearish momentum before the close of the session today. And I eliminate the possibility of an assignment. The money that I use to reserve the trade, and in that case, I only sold one contract here, so that's $3,800 of my account. That capital becomes available immediately for me to redeploy in another trade, whether it's with Bank of America or something else. That increases the number of trades that we can place in a given period of time, and that's something when you can increase your trading frequency, that matters in income. That matters when it comes to practical income generation, even if you're only doing it by a matter of a few days. Let me show you what I mean. This put sell is something that I placed 23 days ago. But in literal terms, if I let this option expire, which again is my normal plan, I wouldn't be able to place another trade with the same capital until possibly Monday or Tuesday, depending on how your broker's trade settlement works out. It's probably at least a day or two after the expiration date in most cases. So in literal terms, that means that the trading frequency that I've got to work with isn't actually 23 days. It's 25. I'm just going to go ahead and round up a little bit and call it 25 days. Okay. So with that in mind, that means that if I want to figure out how frequently I'm going to be able to place the same trade under the same kind of circumstances, all else being equal, this is nothing more than an estimate, but I divide 25 by 365, and that's 14 trades. I'm going to round down, not up, when I have a decimal, just because I'm trying to make this as realistic as possible and to err on the side of conservative. So 14 trades is pretty much the most that I'll be looking at. So let's divide that by 365. And that equals 14 trades. Now, if I can repeat the same process, the same return, then I can multiply 14 by 1.89% to kind of get an annualized idea of what that number should translate to. Go ahead and switch this again just a little bit. And so we'll do 14 times 1.89. Okay, 26.46%. That's really nice. That's actually very attractive. On an annualized basis. But what if I bought the option back today and instead of 25 days or even 23, I shortened the duration of this trade down to 22 days. Doesn't sound like much. Doesn't sound like it would really make a really big difference. But let's take a look at it. Let's consider what that really looks like. 23 days divided by 365. Sorry. Or 365 divided by 23, actually. Okay, now I'm at almost 16 trades. Again, I'm going to round down, so it's going to be 15 trades. If you want to be more generous with this, then you can, but we'll call it 15. So now I go 15 times 1.89%. and 28.35. So a difference of almost 2% per year just by shortening the amount of time in the trade by about 2 days. That's interesting. Think about that right now. That's a bigger difference than, say, the difference between a 2 year or even a 3 year Treasury bond right now, as the yield ranges on Treasury bonds right now is really, really narrow, and in fact they're inverted. But 26 and a half versus almost 28 and a half might not sound like a whole lot, but you repeat this process again and again and again, year over year over time, this adds up. Yes. So this is where trading frequency really can become an advantage in a good income generation system. Now, that doesn't mean that this is what you have to do. I am very much in favor of this if this is something that you like to be able to do. If your preference is to try to minimize the likelihood of being assigned, you want to manage more actively than what I do with my trades, then this is where this can really work out to be an advantage. If you have, when you do this, you may have opportunities, in fact, to act on these positions well before the day of expiration, maybe the week of, a few days before, maybe even a week before. Sometimes we've seen stocks make very quick moves in our favor very shortly after we placed a trade, and within just a few days, you had an opportunity to close out the trade with eliminate the obligation and redeploy the capital again. So there's lots of different opportunities that trading frequency and trying to increase that, where that gives you a real advantage as a put seller, as somebody who is focused on income generation. Why don't I actually do this? And I laugh because every time I've had this, it seems like every time I have this conversation with certain people, I get them literally asking me this question: Why aren't you doing this? Why do you keep just waiting for expiration and then letting the extra 2 to 3 days to settlement play out? Well, it's because this is what is practical for me in terms of managing my system correctly. When I think about the responsibility I have to Rebel Income and to all of you in trying to communicate and manage my trades, manage the information that I'm providing to you, this just makes it a little bit easier. It also fits in this way a little bit better into my overall lifestyle. I don't believe trading should be something that becomes the excuse me, the occupying or defining force of my life. It's just another part of the rest of my life, and so this is the way that that it works for me to keep that in proper context. So there's not a right or wrong answer to this. I'm actively willing to accept a little bit lower returns because my trading frequency isn't going to be as high as it is for somebody who's managing their trades more actively. All right. So that's Bank of America. We'll see where this lands, of course, where it finishes out the day. Any other thoughts or comments about this one? Anybody else that's in this trade? Gibbs says nope. Okay. Barry says he's in it, but didn't bring in as much premium. So hey, you've been getting a lot of tick marks lately. So this time I get to give myself one. T versus B. Turning it into a competition, man. All right. In the weeks ahead, we do have some other trades coming up here. So let's go ahead and dive into some of those. Let's go down here to FMC. This is a stock in the material sector that I came across last month. Placed trade on this on the 14th. This one was one of those rare cases where I actually went out a little bit over 30 days. Part of that was a function of the fact that FMC uh, only offers monthly options. And Barry will certainly get to Nike. He says he did pretty well on the Nike trade. So we'll see. We'll see how that worked out. And it sounds like he'll probably get an opportunity to make up the competitive difference. The FMC though only offers monthly options, and so the nearer term expiration that was about a week away when I placed this trade was really not very practical. And on this one, I was able to generate total income on this of about 3.5% for the $6,000 I put under reserve by selling one contract, bringing in $2.10. Now this is interesting, and I want to before we move over to look at the stock, I want to put the premium under a little bit of a lens for a moment, because one of the nice things about put selling is not only the income that comes in immediately comes up as cash that's available to you in your account, but also from an accounting standpoint, those premiums can be counted against the cost basis in the stock if you are assigned. So what that means, excuse me, is that if I do end up getting assigned at $60, I can go ahead and subtract the $2.10 that I brought in on the income. And my actual cost base on this is $57.90. So let me just put that in here. Let's see, cost basis, $57.90. This is another one of the reasons I like put selling, is because not only does it give me the ability to set the trade, the price that I'm willing to buy the stock at. Again, as always, I'm looking for what I consider to be a really nice discount price. And I think 60 is a nice price for FMC. But the premium, I get to count even more, and that lowers what that overall cost might be even further. So really, I'm not buying it at 60. I'm actually being able to get in at 57.90. That gives me a little bit of a buffer to absorb if I'm assigned. That means the stock is below the $60 strike price, right? So the premium acts as a little bit of a buffer against that reality. It doesn't mean that if the stock experiences a really sharp drop, which sometimes does happen, that you're going to completely mitigate that effect. But this cushion does provide a little bit of loss management, and that's nice. It helps to keep the trade in a broader context. Barry says, in fact, Schwab states the cost point net of the premium after a couple of days. So even your broker it will very often reflect this reality as well. So thank you, Barry. I appreciate that comment. And not all brokers do this, to be completely transparent. I have a small IRA, for example, at Fidelity Investments that I use for some of the trades that I demonstrate on my YouTube channel, and they don't show the same net effect from the premiums I generate from the trades versus the actual cost in the stocks that I take assignments on. That does work out eventually at the end of the year when I do the end of the year accounting. But their interface shows it a little bit differently. So every broker tends to may treat this a little bit differently, but Barry, you're exactly right on in terms of Schwab. So okay, so let's go ahead and take a look and let's see where FMC is sitting right now. And so FMC, there we go. It was sitting really close to 60 just a couple of days ago, and I was having to think about, well, it looks like I might be assigned. Again, not a terrible thing. I was certainly not afraid of that, but picked up some momentum the last couple of days, including a nice little move, $1.33 so far today. Now, it could reverse in the next few hours, and it could still go below 60, but as of now, it looks like everything is pretty okay on this one. Now, in the same vein as what we were looking at on Bank of America, this is still a week to expiration. So I have the same opportunity to evaluate my trade that we just did with Bank of America. But the advantage is that with that week to expiration, there is still a risk. If market volatility and sentiment turns back negative again, it's very possible we see, there's some significant swings down that can happen in this stock in a very short period of time, right? And so if some of that turns bearish, then by the end of next week, we could be talking about a very different story in this stock right now than what I am now. Right now, it looks very favorable. So what if I wanted to take advantage of that fact? And if any of you were in this trade as well, please go ahead and let's put up the numbers and we'll compare notes. All right, 7 days to expiration. Here's the 60. Remember, on this one, I brought in, I'll go ahead and put in, Barry didn't get this one, okay. $2.10 per share. And that's just fine. No problem. There is certainly not an expectation that you place every trade that I do. But on this one, so with that 210 and the current, let me just switch this here. There we go. The current price action, the asking price on this is 30 cents right now. We've got about a 10-cent difference between the two, between bid and asking prices. So maybe there's an opportunity to go maybe the midpoint at 25. But one of the other elements about the options on this particular stock, since we only have weekly options, this does tend to have not as much activity. And so that does change the dynamics of the evaluation a little bit. Has been about 12 contracts in volume. Actually, pretty okay open interest on this one. Again, the closer this gets to expiration, the more open interest and volume will pick up. But this does mean that if I wanted to trade this, if I wanted to manage this trade right now, there's an opportunity to do that. I probably could get 25 cents on this one if I was willing to wait for the market to come to me, which is what a lot of our active traders, our active rollers, as it were, like to do. It means that you may have to wait a little bit. The trade's not going to be placed immediately, but if you're willing to wait for up to the closing period, then there's an opportunity for you there to manage and set the price that you want to get out at, even at an even more advantageous level. So, but even if I didn't do that, if I just went ahead and accepted the current asking price on this, oops. Oops, wrong button. Sorry, guys. Got to pay attention to what I'm holding down. All right. So if I buy this back at 30 cents, then that's going to put the net cost basis. Let's move this. Net premium, I should say, to $1.80, and still 7 days to expiration. Well, that's interesting. So now if we think about this, $1.80, I brought in 3.5% on this when I sold the put option. So if I divide $1.80 by 60, I can even do this math without the calculator, right? This is a 3% return, and I turned the trade from 37 days into 30 days. Again, not a recommendation to buy or sell, as always, but this is another really, really good example of how to increase your trading frequency. Yeah, I'm going to give up about 0.5% of the total premium I brought in on this, but I'm also going to shorten the trade by 7 days. And just to be clear, that means the difference between 365 and 37 is 9 trades. I can't round up to 10. There's no fractional trades here. So that's 9 trades per year if I'm working 37 days at a time, versus 365 divided by 30, 12 trades. It's a difference of 3 trades. Now think about that again. If I can do 3% on every single one of these, and this is easy math, I know, but I'm just going to show you 36 is what this would translate to annualized. If I'm doing 9 trades at 3.5, 31%. Okay, about 4.5% difference by simply increasing the trading frequency by 7 days. These are real numbers. This translates in the long term, year over year over year, into real growth, and that's why this becomes something that is an advantage if you want to manage these trades effectively. Again, I'm going to let this play out to expiration, and I'm okay with that. I'm okay with 31.5% on an annualized basis for this. If that's where it lands, that's perfectly okay with me. But if you did want to go ahead and close this out early, and you wanted to think about the possibility of rolling up again, remember I brought in $2.10 on this on my initial put sale. If you're willing to work with a similar kind of a time period, here we are, 35 days. Let me get to the drawing tool. There we go. It's 35 days rather than 37, but here's 235 at 62.50. Roll up a little bit. Value proposition is still really nice at 62.50, and if you're willing to work with this little bit more extended time period here, then you could do that. Activity here, plenty of open interest, no volume so far today, but plenty of open interest. So if you didn't want to monkey around with the difference between bid and ask price, you just went ahead and went at 235. That would not have it. You would not have any problem getting that trade filled. Not a recommendation to buy or sell, but just for context, that's 3.75% rather than the 3.5% that I placed on the original put sale. placing 2 trades, extending it out to a little bit of just a little bit over 2 months of time, and being able to get about 6.5, a little over 6.5%. That's not terrible. This is why this is a really, really good example of why I don't just look for weekly options. I know that a lot of people kind of shy away from stocks that don't have weekly options and only work with or excuse me, they only work with weekly and avoid stocks that only do monthly options because there's not as much activity, not as much volume or open interest here. I totally get that. I really do. But that also negates some of the opportunities in some of these stocks that really can work out quite nicely. Uh, Again, when the conditions are right, and conditions are right, include obviously, having a little bit of an uptrend working for us. In this case, we're getting 200-day moving average is starting to slope up a little bit to provide good support for the shorter term trend. Is it going to continue? Maybe. This crossover of the 20-day moving average at the beginning of August above the 200 was really interesting. That's generally a bullish signal. Just for giggles, let's throw on let's make this the 50 as well. And change the color. We'll do orange just for, there we go. And so we can see since that crossover happened, change my, oops. Really support for this is coming from the 50-day moving average. We're bouncing right along that line right now, and it's moving up as well. And so that's very solid indication. That's this is looking like a really, really nice bullish pattern right now. A push above the 20-day moving average today or possibly Monday would only confirm that likelihood even more. And if we can see a break above this pivot high, which looks to be probably, what is this, around 64, 63.50. If we see a push above that line, then a break above 63.50 could have even more upside to it. So be strong indications that this much longer term downward trend that we saw in the stock all the way until August really is starting to reverse and is likely to continue to move up. So that's really interesting. All right. Any other thoughts, comments, questions about FMC or any of the elements of what this stock is doing? All right. We also have a put sell on Magna International coming up next week. This is an auto component stock. I've talked about this in previous webinars. There's a couple of different companies specifically in the auto components sub-industry of autos that I really like. Magna is one of them. BorgWarner is another. And I haven't opened, just in interest of full transparency, I have currently open position in Borg Warner um, from a previous put sale assignment. But Magna here, I sold the 42.50 strike price, brought in $1.15 in terms of income on this for about 3 weeks of time, and 2.71%. Again, very nice trade in terms of the overall income brought in. Let's go ahead and switch over to this, and then Barry, I'll give you a chance to beat me up on Nike. All right, here we go. Here's Magna. Again, it was down a little bit, kind of like what we were seeing, with FMC. Been retracing down off of 42, and now it's at about $40. Again, remember, I sold 42.50, so looks like if the stock doesn't pick up about $2.50 of momentum between now and next week, it looks like I'm going to be taking an assignment here, because in literal terms, 42.50 is all the way right about here. So it's got to make up quite a bit of distance. Barry, you and me both. So working at a similar case here. Again, this doesn't really frighten me. The 42.50 I brought in, or excuse me, the 42.50 strike price that I sold, strike price that I like. That would be a good price to own this stock at. And yes, you can say, well, if you bought it at 40, that's better. Well, true. But when we placed the trade, 42.50 was the strike price that was attractive and useful for income generation purposes. And so that's the one that we used. So hindsight is always 2020. I'm not going to worry about it. If I like it at 42.50, I'm okay with that. If the stock is down here at 40, that's all right. I also have the $1.15 that I brought in premium. So in literal terms, my actual cost is about $41.35, not too far away from 40. So I'm all right. This is something that I'd be okay with. It's a company I like. It's in an industry that I think has some good prospects for the not only the near term, but also for the much longer term, especially Magna and Borg Warner both have an interesting spot, not only in auto components, providing components to big three automakers, but also in the aftermarket, talking about replacement parts, right? People have always got to be able to repair their vehicles, and more importantly, they've both been branching out and established pretty strong footholds in EVs, electric vehicles, which as more of these more electrical vehicles are adopted, the need for replacement parts in EVs should also increase. So got a couple of different places that I think are going to act as useful tailwinds for this industry. So I'm okay with this. This pattern really does not scare me too much. But if you are, again, of the mindset of trying to manage the trade, let's go ahead and take a look here. This would mean having to eat a little bit of a loss to get out now, a week before expiration, to avoid the potential of an assignment. Remember, we're talking about American-style options here, and what that means when you're versus European-style options. European-style options can only be exercised, put or call, on the expiration date. American-style options can be exercised at any point that is advantageous for the buyer. So as a seller, that you have to go in understanding that anytime the stock is, and I'm selling put options, anytime the stock is below the strike price that I've sold, I could be assigned. It doesn't have to happen up to expiration. With the stock about $2.50 below the strike price that I sold, that becomes more likely with each passing day. If the stock continues to follow the pattern of bullish momentum, that we've seen for the last couple of days here, where it's rallying, then that kind of minimizes some of that potential, but it doesn't totally eliminate it. So if I wanted to buy this back right now, I would have to pay the 255 asking price. A little bit of a difference here, about 25 cents between the ask and the bid. So I could maybe try to minimize that a little bit. The last trade was 231. Let's take a look at how active this has been. I have plenty of open interest here. 85 is the day's volume. That's pretty healthy. So last trade being at 231, maybe an opportunity to adjust a sell to close trade on this if you wanted, down to about 230. And that would help to minimize the overall blow that you took. Why would you want? Why might you want to close this out a week ahead of expiration? Just to minimize the potential of being assigned. If that's something that you're not interested in, isn't going to be as attractive to you as say it may be for me, then that's okay. You can go ahead and do that, and there's nothing wrong with taking that mindset. The one thing about increasing trading frequency, remember, is that you're also going to increase the number of trades that you will absorb a loss on. If I'm going to manage trades effectively before expiration, not only does that mean leveraging opportunities to buy them back at lower prices than I sold when the stock moves in my favor, it also means that I should plan on trying to minimize the potential obligation, potential loss if the stock is moving sharply against me. So in the case of Magna and MGA, in this case, this would be an example of if taking a put sale assignment is not part of my trading plan, then closing this out, buying this back right now, right here at 255, probably makes sense. Because it would be better to absorb that loss, $1.15, $1.40, whatever it may be. Again, I only sold one contract on this. So eating $130 loss probably makes more sense than taking an assignment that would be $250, $2.50 per share, right? $250 below the price that I actually end up paying. It's minimizing the loss by about 50%. Also eliminating the possibility of having to hold the stock if the downward trend does extend itself. These are potentialities that you really can't, that you should really never completely try to ignore. The downward trend here is very solid. You can see the 50-day clearly moving down. I don't have orange to match my 50, right? Clearly moving down. My 20 had been going up, started to flatten, but now it's even looking like it's starting to bend over a little bit. And there's still continued downside down here to about 38 right now. And if we extend this out a little bit further, nope, I don't want that. Have to go all the way back to 2020 to see where it's been this low. Isn't that interesting? So the stock's about 40.13 right now. 38 would be where its next support is. From there, I mean, possible next levels of support maybe around 35. So if you don't want to deal with the potential of those kinds of declines, buy it back. Barry says you could sell the 42.50 October option and pretty much keep the initial premium. So thank you. Let's go ahead and take a look at that. Just like FMC, Magna doesn't offer weekly options. So yeah, I could buy this back, eat that $1.15 loss, still go at 42.50, still be a little bit in the money, right? About $2.50, but bring in 285 on that. Yeah, and pretty much like you said, keep the initial premium and see if it rallies. To be clear, if you wanted to take that option, if this was going to be a choice for you, you would clearly need to be bullish on MGA and still willing to accept 42.50 as a potential assignment price and obligation. So as always, if you're not willing to do that, you should not place that trade. Okay. All right, got just a few minutes left, and I've got to give Barry a chance to even the score here. So let's go ahead and take a look at Nike, which was the stock that we used for this week's put sale. You can see it coming up here. It's rallying a little bit today, about 78, just a little bit below $79. And for context, I sold the $76 strike price, brought in $1.20, just a little over 1.5% on this. This was different than the trade that I placed or that I published on Tuesday. I was planning to work with the $77 strike price. The stock's price action gave me an opportunity to manage that a little bit lower, which was nice. So I decided to take advantage of it. 16-day trade. So there's where I landed. And Barry, you said that you did pretty well on Nike. So let's go ahead and see your numbers. And while you're doing that, so remember, I got one tick mark earlier versus Barry. Let's see, went with October 4th expiration. So went out a little bit further, right, on this one. Let me just... Now, I sold the September 27th expiration, so he went out a week longer. Still working with the $76 strike and brought in $257. All right. It's a full dollar better than I did. So that means that Barry gets a longer tick mark than I do. Which means I'll technically give you the edge for today, Barry. I did a little better than you on gee, which trade was that now? I need to remember. On Bank of America, but you did a lot better than me on Nike. So that's nice. So yeah, 20 cents better. So 257 there, and I brought in $1.20 on Nike. So you did $1.37 better on Nike for me. For in your case, with an extra week of expiration, an extra week to expiration, extra week of time. So I like the trade. I think that's nice. And again, it's a good example of evaluating the stock and in the moment. Remember, I never place these trades until the day after I post them. But once you see them, if you see it about the same time that I post it, you may have an opportunity to do a little bit better and certainly to respond more quickly than I do. And sometimes that's going to work in your favor. So that's kind of nice when you can do that. That's an advantage, and that's something to be happy about. So, all right, everybody, thank you. I really appreciate your time and your participation as always. I hope you have a great week. If there is anything that comes up between now and next week, please don't hesitate to let me know. Again, you can. Yeah, Barry says, I haven't always remembered to check the trade without the email. Yes, this is an adjustment we're all still trying to make, and I appreciate that. Remember, if you do have any questions for me between now and next week, first go ahead and drop it in the open discussion channel. That's going to be the quickest way for me to see it and have an opportunity to respond. You can always email me, but remember, my email address has changed, rebelincomesystem@gmail.com. Thomas@investive.co is now inactive, is not being used. So use rebelincomesystem@gmail.com, and I'll be happy to respond either way that you prefer to communicate with me. Everybody, thanks again. I appreciate your time. Hope you have a wonderful weekend and a great week, and we'll talk next time.